When you look at, I guess, the quote unquote animal spirits that have been in this market, at least for the last 3 weeks or so since the election, and even slightly prior to that, can we pin this on the election? Can we pin this on optimism for that new administration that takes shape in January?
So, Romain, I think we have had a very big rally this year in terms of equity markets. And what has happened, of course, we saw Magnificent Seven being up, by 55% this year? That was long before the election. Around the election time, there was uncertainty and which way is the election going to go and what will the impact of the election be. And obviously, with the kinds of promises that President Trump had made, and most recently in the last day or two with the selection of Scott Bessent, which has been positive for the markets, there is definitely another push for markets to be joyful.
So, well, let's talk about kind of what sustains this, because it's one thing to be hopeful for potential things that actually haven't happened. Of course, as you also know, at some point, you've got to make good on those things, and those things have to flow through into corporate earnings and into economic growth. Do you have confidence that we'll see that?
I think I would look at two different forces going on. One is the force of what is going on in our economy that has been propelling it forward, which is AI, sort of the new knowledge economy, together with power, data centers, energy, all of those things. Those things have been going on for a little bit, and I think unless someone messes them up, I think those will be big forces for growth in the U.S. economy, and for the reasons that we've seen the flows that you just talked about. The other side is what will be the economic policies of the new government and Scott Bessent and his and others who are going to be running the economy. I knew Scott a long time ago when he was in his previous life, and he is one of the best market makers and one of the best traders and macro thinkers. And so the question is, he made a lot of money understanding what policymakers in Japan, in the UK, in US did, and trying to make trades that took advantage of policymakers' decisions. Now that he will be a policymaker, he has a lot of experience to sit on the other side and see how his policies will impact the economy, how his policies will impact markets in a way that really very few have. So I think he certainly is in a very good position to do that. He also will have at this time Jay Powell in the Federal Reserve, who's watching the numbers. And I think if they work well together, that could be quite powerful for continued growth.
And then it looks like maybe Kevin Warsh, once Powell's term is ended, so maybe that in as well. So Afsaneh, does that mean that you should stay in the U.S. equity market and that joyfulness will continue, or do you need to be more discerning in that joy?
So I think with the equity markets, I think those forces move us towards sort of a positive outlook looking longer term into 2025. And the other force that is happening is how China is self-destructing. I don't mean just because of tariffs, but because of the policies of President Xi. So that China, while it might have done well in terms of its equity markets over the last year, in general has not been a go-to place for investors, and really will not be a go-to place for political reasons, but for economic reasons moving forward. Similarly, other parts of the world have not had the kind of returns that the U.S. has had, and the kind of things that we just talked about, which are more likely to bring more capital into the U.S. So I think all in all, we are in a good place for the U.S. economy to continue doing well and for the markets to continue to do well here. But I should also just mention that big institutional investors are reducing allocations to equities a little bit just to rebalance because, the markets have done so well.
And when you say that the U.S. can continue to sort of outperform, is that going to be on a broad index level, or does it also count for, say, value in small caps, like the nuts and bolts of the economy? Does it also work there?
I think probably both. We saw, for example, the small cap markets being up today. I think what will happen in the U.S. is, obviously, it was the larger stocks, it was things that were related to AI that did well. But now with deregulation, what we're going to see is that smaller companies can prosper in a way that smaller companies often get more stifled by regulation than larger companies. So that could be another force to help the small cap and other kinds of markets to to do better than we expect, plus everything else that brings them up. Obviously, in this kind of market, there will be a lot of losers too, because companies that will not be able to have the right earnings will get sort of hurt, and we should just watch out for the stock picking. So the value. So I would look at momentum, but I would also look at value carefully.
Do you find value, though, right there? I mean, because Afsaneh, a lot of people are looking at this market. I'm specifically talking about the U.S. market, and they're predicting all these extra gains. But some of those same people will then talk about how overvalued, at least on an individual basis, a lot of these stocks are. So kind of square that circle for us.
So let's just take the utility sector. In terms of power and the amount of power that we will need in the next few years, every single utility company will need to be making more investments. Those who do better, those who are faster with diversifying their sources of energy and moving faster with the use of technology and AI, but also maybe getting into modular nuclear, will do better. And the forces are huge, I think. I think it's something that, again, started a few years ago, but the momentum of that force could be enormous for certain sectors, but again, not for all sectors.